Hi there, good afternoon. You've tuned into ET now, and this is Market Fatfat with me, Cheryl D'Souza. Along with me, I have Vinny Motiwala. Very good morning, good afternoon to you, Vinny. And the reason why maybe I have forgotten which time of the day it is, given the fact that the markets are doing absolutely what they were doing at the start of the day. They're holding on to good, strong gains. You have Nifty now that has surpassed the 18,700 level as well in today's trading session. Let's take a deeper dive into the markets and see what we are doing. Like I mentioned, Nifty is trading higher by about 0.5%. Ditto coming in for Sensex, which is trading with gains of about 350 points as we speak. Talking about Nifty Bank, that's the one that is marginally underperforming the benchmark indices, 0.2% downtick, or rather Nifty Bank is seeing gains of just 0.2% right now, while the broader markets are showing strength once again, outperforming the benchmark indices. Take a look at mid-cap index, is trading with gains of upwards of about 1%. The breadth of the market currently is very much tilted in the favor of the advances. So if you look at the market breadth, we still have more gainers when you compare it with the decliners. The ratio is 1:2. Talking about the benchmark, rather sectoral indices, all the sectors right now are trading with a positive bias. All of them are in the green. You have media index, that's the top sectoral gainer as we speak, 1.5% uptick coming from media index. Realty index too moving in tandem with media index, 1.5% uptick coming for realty index as well. FMCG is the one also that's seeing gains of about 1.2%. Pharma index is up about 1%. Metal index is up about 0.9% as we speak. So yes, it's a good day of gains coming in for the benchmark indices, for the broader markets, as well as sectoral indices, Vinny.
Absolutely, that's how the market is looking like as of now. But let's get started with all those stocks that are buzzing in trade, either on the back of news flows or on the back of technicals as well. On the technicals, we're joined by Kunal Bothra this afternoon, while from the research team, we have Amakshi as well as Lisa joining in with us. A very good afternoon to all three of you all, and good afternoon to you as well, Cheryl. I'm going to be starting with the first stock as always, and we're going to talk about Mankind Pharma today. Now, this stock is in focus. Why? Because we have Systematics that has actually initiated coverage on Mankind Pharma. Let's not forget this was a recently listed company. Now, they've initiated coverage with a hold rating, given a target price of 1,425 rupees per share, which is slightly below in terms of the target price is already achieved. So yes, there's a bit of a lower target price that they're giving from the current price where the market is, the stock is currently at. Now, in terms of what are they seeing in terms of triggers, they believe the secular domestic growth should support the low double-digit top-line growth, and new growth avenues could also shape up for the company in organic initiatives as well as export formulations to supplement better capacity utilization as well as brand leverage. That will be something that will be aiding the margins of the company. As of now, they're neutral on the stock. They believe it's a slight bit of an expensive stock as of now for them, which is showing a bit of and representing a limited upside according to them is what they're feeling. And obviously keep an eye out on this one in trade. Mankind Pharma as of now is trading with gains of almost 2% as we speak.
And not just the Systematic, which has initiated a hold stance. Also, you have JP Morgan, which has come out with, they've initiated a coverage on Mankind Pharma. They've given an overweight rating as well on that particular counter. With also, that's one of the reasons why you need to watch out for this stock, because you have a lot of brokerages taking a note of this one, and JP Morgan also initiating coverage on this one. But let's move on then, and let's talk about the next stock that we have in focus right now in today's trading session. Remember, there are a lot of stocks are moving on individual news flows, but talking about the next stock, it is Hero MotoCorp, and that particular counter is in focus in today's trading session. Remember, a lot of news specs coming in. They had their analyst meet as well. And in analyst meet, a lot of brokerages have come out with their note on Hero MotoCorp. Kotak Institutional has maintained a reduced rating on Hero MotoCorp. Also, you have a CLSA that has a sell rating on Hero MotoCorp. While for Kotak, the target is about 2,600 rupees per share. Kotak is saying that they remain cautious on the demand recovery given the price increases by original equipment manufacturers, resulting in muted replacement demand trends. They said that it will be tough for the company given its weak brand franchise in the premium segment. So that's the word coming in from Kotak, while Nomura has maintained a neutral stance with the target that is unchanged at about 2,870 rupees per share. So a slew of brokerages coming out with their take on Hero MotoCorp post their analyst meet. Nomura, like I said, maintaining a neutral stance with a target of 2,870. They're expecting a cyclical recovery in two-wheelers in FY24 owing to lower inflation and rural recovery. So yes, mixed views coming in from brokerages post that analyst meet of Hero MotoCorp.
Okay, mixed views coming in from brokerages, but Kunal, which side are you expecting Hero MotoCorp to move there?
Well, I'm expecting the stock to perform quite well over the near term. In fact, the stock has managed to break past about two very important technical patterns. One is on the price front, where the stock for the third consecutive month has shown very good recovery. It's surpassed the previous swing highs just about at 2,850, 2,900 mark. It's trading about those levels. And the second and the most important point is that the stock has shown a breakout of its 200-day moving average. This also is a very strong factor of indicating that the trends could have reversed for positive for Hero MotoCorp. So both in terms of the price as well as in terms of indicators, the stock is showing a lot of strength. Now, in terms of the potential target on the upside, I would believe that if the recent 3-4 months of price performance is something to go by, then we can expect at least another 300 points on the upside for Hero MotoCorp over the next 6 to 9 months. So the targets for Hero Moto comes in the range of 3,250, 3,300 with a time span of 6 months plus.
All right, 3,300 with a 6-month time frame is the target that that Kunal has for Hero MotoCorp. But we also spoke to Mitul Shah to understand about what he expects from the company going ahead, post especially the commentary coming in from Hero MotoCorp management post the analyst call. So listen to what he has to say.
Three parameters in terms of expanding or growing in the core and winning premiumization, and of course EV. All these three levers, companies now focusing more in FY24 and FY25 with a number of new launches, as well as expanding the network also, as you pointed out rightly on the EV side. Just from the 3 cities, now they are planning to go to 100 plus cities. Of course, EV will still remain much smaller compared to the overall pie of the company's volume. But other areas where company was lacking for so many years, that is a premium segment, now company is expanding, and most of these new products are coming with this X-Tech, that is with extra technology. And company highlighted that despite being 4 to 8% higher price.
Okay, let's move on then and shift gears and talk about JSW Steel, Lisa. Why is this one in focus today? What's the news spec?
Yes, there are two reasons for the momentum gain seen in JSW Steel. It's up around 1.6% as we speak. And the first reason being that JSW Steel has emerged as the preferred bidder of mining lease for iron ore resources in Goa. And they have won 2 blocks in that. The combined iron ore resources, that is projected around 74 million metric tons. Now, this goes with JSW's growth strategy of achieving around 10% growth in FY24, and that will be via its expanded capacities. And the second reason is that it has released its crude steel production data for the month of May, and they have achieved a growth of around 7% on year-on-year basis, and the crude steel production that stood at around 21.78 lakh tons. Even the India operation, that was up 6% on year-on-year basis. So that's why we can see a positive momentum in JSW Steel in today's session.
All right, moving on, let's talk about Trent and Vamakshi. In Vinny's words, why is Trent trending today?
Well, yes, this stock is definitely trending today. The company had held an AGM yesterday, and let me quickly take you through some of the important takeaways. The consolidated revenue surpassed 10,000 crore mark in FY23. Zudio has demonstrated ability to gain market share in value fashion segment while also improving profitability. And important to note that Zudio itself contributes now 40% to the standalone revenues of the company as compared to 16% in FY20. As far as the store addition plan is concerned, it has been aggressive in the past, and going ahead, it will continue to be aggressive, especially it is skewed towards Zudio. They're planning to add 200 stores as far as Zudio is concerned. Apart from that, there are several new engines of growth emerging for this counter. Star Bazaar is expected to be a key growth engine driven by its cluster strategy, value offerings, as well as scaling up of its omni-channel and also making it profitable.
New segments such as Utsa and Misbu are also ready for expansion, and in fact the company is planning to scale up its recent foray into the ethnic wear segment through Samo by increasing its store count to 100 over the next few years. So largely those were all the important takeaways from the AGM of Trent, and that is the reason why the stock is soaring away in trade today, up nearly 4% higher as we speak.
Okay, let's keep an eye out on that one. But talking about the QSR space, we have Mrs. Vectors. Kunal, you've spoken about this before as well, time and again as well. And I just want to say that, in the last 1 year, from 245, the stock has moved to around, as of now, 811, Kunal. Previous target prices were crossed. Now, what is the new target price? Are you saying that we should book profits, or still time to actually buy this one as well?
I think it still could be time to buy the stock, even at current levels, or in case if there is any kind of a dip like what we saw for, the stock 2 days back when it was almost at 755, 760 range for itself. So any kind of a 50 point, 70 point drop for the stock should be taken as a good buying opportunity. The fact that the stock over the last 3-4 months of this very steep price action has not yet broken or even retested the 50 moving average on closing basis indicates that the trend has been very, very strong for Bector Foods, and my sense is that the volumes which had shot up over the last 1 week, 2 weeks for the stock indicates that there could be a strong behavior of change of hands for the stock, as well as on the upside the stock could probably try and get into a stable uptrend going forward. So I believe mild corrections should be taken as a good buying opportunity. The trend still lasts and sustains for the stock, and we're expecting the stock possibly in the next 1 year to 2 years to try and cross past about the levels of 1,000 as well.
Okay, let's move on and talk about granules then. This one is in focus. Why? Because today the company has actually announced on the BSE that they've received a US FDA approval, and it's for an ANDA which they've received for metoprolol, and this mainly is used for the treatment of hypertension in order to lower the blood pressure. Now, when you look at it, granules has as of now got a total of 57 ANDA approvals from the US FDA, 55 approvals and 2 tentative approvals is what they have received. The market for this drug in the US is currently at around $321 million, and this is according to the MAT March data that is there. So yes, keep an eye out on this one. A very big market that does come in with this drug as well, and as of now you can see the stock is buzzing and trading with gains of almost 2%.
All right, let's put the spotlight on Tata Motors then, because yesterday Tata Motors during the market hours we saw that the analyst report or the JLR investor report, and post that you have a lot of brokerages that have actually come out with their rating for JLR or other Tata Motors. Jefferies is saying that JLR's chip issue are easing and driving a turnaround in the operational and financial performance, and they believe that Tata Motors will benefit from good demand cycle and improving passenger vehicle franchise as well. The commercial vehicle demand is expected to be strong, aided by favorable macro conditions, is what Phillip Capital has to say. They're saying that the company says that it expects the volume growth to be driven by production ramp-up and pending order book. While analysts at Nuvama, Phillip Capital and Jefferies have reiterated a buy stance on Tata Motors, and also they have increased the target as well for the counter. But as of now, as you can see, the stock has given up all of its morning gains, and that means that it has also gone ahead and snapped a 2-day gaining streak.
Okay, let's move on and talk about Havells on the chart, Kunal. What are the targets that one should keep an eye out on for this now?
So Havells has been a relatively better performing stock as compared to most of the other peers. Now the only reason for flagging off Havells is last month there was a very sharp correction for the stock from 1320.25 to almost 1240 in a matter of 3-4 trading sessions. Now what the stock has actually done is it's just undone the correction. The stock had seen almost a 100-point correction from the 1322 mark. My belief is that on the upside we could be looking at least another 70 to 80 points on the upside for Havells. The patterns have been very strong. The stock has managed to absorb the last 3-4 days of the market volatility and is now coming back towards the breakout of this end of consolidation. So all of the chart patterns, the previous history augurs very well for Havells, and I would expect the stock to rally up at least another 70 to 100 points from current levels with a potential target of 1450 approximately.
All right, so that's the take coming in on Havels. Let's talk about, or rather, let me actually mark the flash on the bottom of your screen because 5.7 magnitude earthquake has struck eastern Kashmir region. Also, you had tremors felt in Delhi and other NCR region as well. So something to watch out for. 5.7 for now is what the agencies is attributing. 5.7 magnitude earthquake has struck eastern Kashmir region. So let's watch out for some more updates on that particular front. Tremors were felt in Delhi as well. But let's talk about Oracle Financial, Lisa. And Oracle, the parent company, did hit a record high, and the buzzword was definitely AI.
Yes, you're right, Cheryl. So, Oracle Financial Services, parent Oracle Corporation, they have come out with their earnings, and their top and bottom lines both have surpassed analyst expectations. The revenue stood at around $13.84 billion versus $13.74 billion estimated. Even the guidance, most importantly, that surpassed Wall Street expectations. The adjusted earnings growth is expected to be around 8 to 10%, driven by the revenue growth of around 8 to 10%. Earnings is expected to be around $1.12 to $1.16 per share. And what the analyst expected, it would be at around 7 to 7.5% growth. But on the artificial intelligence, the commentary was quite strong. They said that the company will introduce a generative AI, and they will be partnering with the startup Cohere. And Cohere last week, they had said that Oracle was among its investors, and they'll be investing around $270 million funding for that. So even the management highlighted that Oracle's Gen 2 Cloud, that has become the #1 choice for running generative AI workloads, and a boom in generative AI, which needs tremendous computing power, that is boosting demand for their cloud services. So, well, the benefits will obviously flow to the subsidiary Oracle Financial Service, which is listed in India, and that is why we can see the stock trending upwards almost around 6% in today's session.
Let's move on and talk about the cement stocks, Mamakshi. Why is this whole pack in focus? What's happening over here?
Well, yes, Rani, the entire cement pack is buzzing in trade today after a brokerage note that actually came in from Macquarie, and they have highlighted that there is solid demand in the market, and this momentum is in fact expected to continue even going ahead. Energy cost deflation is lending some bit of margin visibility as well, and when Macquarie had actually made this report, the cement price hike was not in their base case. Ultratech Cement remains their top pick as far as the cement pack is concerned. So overall, they've actually maintained an outperform rating on Ultratech, Ambuja as well as Dalmia Bharat, while they maintain a neutral rating on Shree Cement, ACC as well as Ramco Cement. And most important to note that for all the stocks that are under their coverage as far as the cement pack is concerned, they've hiked the target price for all of these counters. So largely, when we look at Macquarie's take on cement, it is very positive. They have given an outperform rating on all the three counters on your screen, and that is the reason why we are seeing Ultratech Cement up by almost 1%. Look at the gains coming on Dalmia Bharat. That stock is trading above 2% as we speak.
All right, moving on then, let's talk about Chola Finance. And Kunal, how are the charts looking for this particular counter?
I think it's an excellent chart for Chola Finance. Over the last 1 year, the stock has recovered 51%, and I think if I'm not wrong, it's almost like 7 or 8 years of consecutive returns on the positive side for Chola Finance. The stock has been making consistent pattern of higher highs year after year. So that generally propels the stock into a very strong uptrending mode. Now the reason for flagging of Chola Finance is over the last 1 or 2 months, the stock was consolidating with a positive bias. Now that's very rare kind of a pattern, because generally we see consolidations to be a tad bit negative for the stock price, but then in this range of consolidation, the stock formed a low of 960 and a high closer to 1060-65. Today the stock seems to have broken out of this rising consolidation. Now this could probably be an indication that the long-term trend has resumed back again for Chola Finance on the upside. Would expect Chola Finance to head towards levels of at least 1150 to 1200 over the very near term.
All right, moving on, let's talk about Engineers India then. And this particular counter at one point in time was seeing an uptick for as much as 3.5%. The company on Monday said that it has received an order from ONGC for about 472 crore rupees. The work order is for replacement of gas compressors and installation of the vessel at Uran plant in Maharashtra. and that will be completed in the next 14 months. So on back of that order win, you saw EIL touching, going as much as, actually rising as much as 3.5% on an intraday basis. Right now cooled off from those elevated levels, still seeing gains of 1.3% as we speak.
Okay, let's move on and talk about the paint stocks. Obviously, we know that pressure that is coming in from a lot of new paint players coming in with big pockets. But Nuvama is saying that they are quite positive on the paint names, whether you look at a Berger Paint, Asian Paints, or even a Pidilite. They're positive on this stock, and we've seen that this buzz is coming in and there on these stocks as well. Let's not forget, obviously, that crude correction came in overnight as well. 4% doubting it over crude prices. Almost 40% of their raw materials for paint companies comes from crude. That is one factor, but Nuvama quite positive on this these stocks despite the entry of Grasim Paints coming in, and they still feel that there is margin recovery in FY24, given that there's a soft crude oil prices, there's a lot of FII buying in coming in, and Pidilite they believe will continue to do well. They also believe that Asian Paint stock remain quite strong. They maintain a buy on Asian Paint, and in spite that up move that they've seen coming in the past 4 months, they're still positive on it, and they believe that they could expect a good demand also in Q1 FY24 is what their understanding is coming in for Asian Paint as well in Q1, aiming for a double-digit volume growth for the quarter as well. So yes, Nuvama is positive on these paint stocks, and that's why we've seen them buzzing in trade as well.
All right, moving on, let's talk about Grasim then. Kunal, yes, in linkage to the paint stock would be the fact that the Grasim is also entering the paint segment. But if you look at Grasim, 1 year after a sharp surge, YTD is done absolutely nothing. If you look at the returns, they are so flat. They are just about 0.8% uptick this year alone, only for Grasim. This is after a sharp rise of upwards of about 30% in the last 1 year. What's your take on Grasim, Nev? Which side of the fence it will actually be on? Will it continue to consolidate, or do you see it break out of the range now?
So an interesting bit because when there are two different sectors like paints as well as cement, when both of these sectors have done reasonably well, look at the charts for Asian Paints, Berger Paints as well as the cement majors over the last 2 months. These stocks have and these sectors have performed exceptionally well. I think there's been almost like a 20% or 25% kind of an average rise into these stocks. That makes the case that Grasim could also stand out to be a strong outperformer or get back into a line of covering up the underperformance with respect to most of the other peers or the very short term. Now the nature of the stock is a tad bit high beta, and that makes the trade a lot more attractive. For traders who have a high risk appetite, could look at Grasim as an interesting bet from current levels. My expectation is that possibly in the next couple of weeks, we may expect a strong up move in the stock and possibly heading towards 1850 to 1900 mark over the very near term.
Okay, Lisa, let's put the spotlight on Usha Martin. What's the reason for this info?
Usha Martin is in focus as Motilal Oswal mutual fund. They have bought stake in Usha Martin, and that is the reason we can see Usha Martin is surging in trade around 4.5%. So Motilal Oswal mutual fund, they have bought around 18.5 lakh shares in this company, and that is via open market transaction. It's at an average price of around 270 per share, and that amounted to around 50 crore. Well, it's not only today that Usha Martin is up. Even in the last 6 months, we see the stock has given an astounding return of around 110%, and versus the Nifty benchmark, which has just given 0.5% return during this duration. So that's on Usha Martin.
All right, that's the reason why Usha Martin is in focus in today's trading session. But Kunal, Nareen, Florine, what's the chart looking like for this one?
After 3 consecutive days of selling, the last 3 days specifically where the stock I think corrected from 4750 to 4350 levels, there was a strong likelihood that the stock may get into a breakdown mode. The supports for Naveen Florin was at 4,300 mark. So, just by a margin of 1% to 1.5%, the stock has managed to protect its support levels, and today you're seeing a bounce back for Naveen Florin, which now brings in a case that possibly closer to that 4,300 mark could actually be a good zone to buy the stock, given the way the stock has recovered after 3 days of very sharp selling. So is the case with many of these other chemical names over the last 3-4 days. Many of these stocks have seen a sharp selling. So Naveen Florin could be an interesting bet from a positional play. 4,300 could be kept as a strong support zone, and keeping that as a stop loss, traders could look at a buy.
Okay, let's move on to an aviation name, and Vamakshi, Indigo is the stock that you've picked out for us. Why is the stock in focus?
Well, Vinny, this counter is in focus after there was speculation that the family of Indigo's co-founder, that is Rakesh Gangwal, is likely to sell stake between 5 to 8% stake worth almost around 7,500 crores. Now, the reports were suggesting that the family was likely to sell stakes in block deal when the lock-in for the shares opened on July 15. But this indeed seems to have already played out for this counter, and in fact the exchanges had asked Indigo with respect to clarification on the same, and just a short while ago in fact the company came out with a clarification stating that it has not received any such information, nor has the company been made aware by the co-founder for their intention to sell the stake. So that is the news flow surrounding Interglobe Aviation, that is Indigo, and that is the reason why the stock is down and out in trade today, down nearly 3% as we speak.
Alright, so that's the news flow surrounding Indigo, but the stock is still under pressure despite the clarification coming in from the management. But on that note, please slip into a break on this edition of Market Fatafat. Stay tuned, more stocks to discuss after the break. Don't go anywhere.